Welcome back to Squawk Box. By now, the world knows that Apple has become the first U.S. trillion-dollar company. So which firm could be next? Dom Chu is here on set with a few names of who's on the list.
Well, by now we know that Amazon is in second place, so the front runner has to be Amazon.com, right? But if we took a look just for perspective on the biggest market cap companies within the S&P 500 and what their current market caps are and what it will take with current share counts and everything else held kind of constant to get to where we are with that trillion-dollar mark with Apple. And as you can see there, Amazon, second place, like we said, it's only got about 12% it needs down to get to the $1 trillion mark. Alphabet, when you combine both share classes together, needs about 17% to get to that trillion mark. So a little bit more work to do there. Microsoft at 21%, and Facebook, because of that big drop, now needs pretty much a double to get to the $1 trillion.
Where was Facebook just 2 weeks ago?
I mean, you're talking about 23, 20, at this point, 26% higher.
Okay,
I mean, from what it was. So we've had a pretty decent drop there. But if you take a look at where the analysts think these stocks are going to go, the 12 to 18-month price targets that FactSet tracks, if you look at Amazon.com shares, it's the only one within the next 12 to 18 months with analyst commentary the way that it is right now that will have that shot.
They would push it there based on their price targets.
So you can see that 1838 is where it is right now. It would need just about $2,050 and change on a per share basis to reach the $1 trillion mark. And right now, the average analyst target price tracked by FactSet is $2,117. So within the next 12 to 18 months, we could see that from Amazon. We looked at the other, if the analysts are right, and we know that Joe always says the analysts don't often get it right. But out of all those companies that we saw at the top, that's the only one that's even close.
That's the one that I would put my money on.
And everyone
is it also the one, and that's the thing, clearly it's going to get there at some point. Do you think whoever, Apple dipped back down below the trillion, if and when Amazon gets there, do they stay there longer? In other words, once they hit it, it's a realer mark in the sense that it's the realized value of
it's funny that you mention that, because oftentimes traders and many portfolio managers will look at relative strength, right? They look at the chart between, if you compare Apple and Amazon, I mean, these are fantastic growth stock companies, and they have been for the better part of a decade now. But within the last 5 or 6 years, that trajectory, that move higher for Amazon has far outpaced a lot of other companies within the S&P. So if you take a look at that, the relative strength near term, it could be that Amazon gets there, and it gets there faster on a relative basis than Apple did. And if it stays there, it maybe speaks to this idea that there are moving parts within these mega cap technology companies that are going to drive it. We talked about this idea that Amazon Web Services is the thing that everybody focuses on right now. But we saw similar moves with Microsoft with their growth initiatives, and also with Alphabet with their growth initiatives. So all of a sudden, you're getting to a point where you're moving the needle with some of these smaller businesses that people kind of said, oh, that's never going to move the needle. And all of a sudden, investors are starting to key on them a lot.
The cloud is the thing that's giving all the profit to Amazon. So that gives them the room to do the things on all the other fronts, whether it's healthcare or whatever other industry they want to break into. I got my profits over here thanks to cloud. I can experiment on this side with low or no margins or losses even and grow my business.
And look at with Alphabet, right? It was cloud that's helping to drive a lot of that stuff now, but it was internet search revenue and advertising that gave them the runway to go and do the things that they do. Moonshots aside, all of those other space projects and everything else, the cloud-driven stuff within Alphabet right now has been given a lot of that resource because of what they did in the business on the other side.
The question piece of history, because I feel like you're an historian also when it comes to the market.
I do love history.
If you look at the biggest companies or the companies that had the biggest both market caps and market share at the time, let's say 10 or 20 years ago, what would those companies look like today? Because there's been some very interesting stories in the past 24 hours around employment, meaning the size of a company and what they would actually look like. But beyond just employment, how big were those companies?
They were bigger shares. I mean, if you take a look at the weighting within the S&P 500 and some of the peak companies at the time, the one that often comes to my mind is IBM, right? If you look in the late 70s, early 80s, mid 80s, IBM was the behemoth out there. And forget about overweighting in technology. It was a large part of the market, large part of the Dow and everything else.
So today's company is bigger or not?
Today's company is probably bigger. It is bigger in terms of, say, employee size and total revenues and whatnot. I'm not sure inflation adjusted how it looks overall. Right. But you speak to this employment component. Companies like them are trying to figure out ways to change the employment component, right? They want to start getting people trained to do new jobs and everything else. The technology component about whether or not those take away real people jobs is going to be the real discussion point for a lot of these companies going forward. This idea that you can create tools, create all of these technologies that will replace us as human beings. I would say this to IBM's credit, they are trying to spearhead these initiatives to kind of, train people outside of traditional four-year college educations to do more vocational type work, give them jobs. Whether or not that's the paradigm, that's going to be the fascinating discussion for me in the next 10 years. Did I need my four-year degree to go and do what I'm doing right now?